Welcome to another trade of the day here at Trader TV Live. Today, it's Fsly. There were a lot of earnings plays overnight that were down 10%, 20%, whether it's going to be Etsy, whether it's going to be Fsly in question, was down 20%. Look, they had a smaller loss than expected, but that guidance, you can't guide poorly in this market, otherwise you're going to get woodshedded. Now, obviously, it was already down almost 50% from that top to bottom, guys, cut in half. It had made a bit of a recovery, and you can see the trend was not looking good on the daily chart. Now, I've highlighted a level here, and you go back to where this was building up here around 35. You had a bit of a bottom at 35. You broke back out, and then you got up to that high at 135. As you come all the way back in, it tried to hold a higher low, and then that was breached. Now, obviously down 20%, you're thinking, why would you want a long trade on a stock that's down that much? It's simply a pure momentum. People call it the dead cat bounce. But I have to have a particular structure that I'm looking for. Sat down, saw it in a tight range. I'm like, okay, that's pretty good. It didn't have a lot of selling into that 20% down move. Feels like all the momentum was going to be gone. The sellers have already panicked overnight. You get that consolidation. Now, I wanted to break at 35 even. Let's file that one away. I like that 35 price. I wanted to catch that break, but it happens here when there's no volume at 9 o'clock. Stock down 20%, bit of a spread. I want to make sure there's going to be liquidity. Let's make sure the momentum is with us and not just blindly take a breakout price. So I allow the market to open. It sells off, and this is where it gets pretty good. You break the pre-market low, but then instantly, and this is a 3-minute chart here, instantly you get a push back through that low, rejecting the bottom break on a stock down 20% when you had most of the earning names getting woodshedded in the morning. And then we take out that 25 low. From there, it's all patience because it puts in a higher low. I believe in the momentum to the upside at that point to fill in some of that gap. As long as it doesn't breach that newly made bottom, I have a nice out. And then it's a very binary trade from a risk standpoint. Now, that first level to the upside, call this one on the show, when it gets to 37, that's the first stall. I got out some on the way up. I trailed a bit as it tried to take out that 37 level. And from there, it became a hold. Now, let's ignore this crazy dark pool wick up here at 37 when it finally took it out. My target was going to be 39 to 40. At the end of the day, I like that 40 round number. I actually didn't believe we'd get all the way to that 42 as it continues to go into the upside. But the key here was all through this time when it was just hanging out in the first 20 to 30 minutes, you have to identify whether you're making a scalp trade, which is getting in and out inside of the range. 20, 30 cents are great on a $37 stock. There were 50-cent moves that I could have had in and out if I was buying some of these lows, but that wasn't the way I wanted to play it. This was a get in, risk to the bottom, so just over $1. That means I'm not taking any profit till we move over $1 in the money, actually $1.50 to be precise. And then when you got the move into 39, that's when I said it's time to take off the rest of this trade. I didn't want to hold it all day, but I was willing to extend that trade longer. And I think the idea here is know what your style of trade is. Plenty of times I'll be doing a dip buy in a similar situation where I'm trying to get around this bottom and then scalp it into the pre-market highs. That's a very, very different trade. With that, you can get a bit impatient. You can take profit when it stalls out. But when you're trying to catch this breakout and you're catching a dead cat bounce and looking for an extended move to the upside, think about the people that wanted to be short this name thinking it was going to continue to go down. And how much conviction do they have? Where are they going to get out? When it starts breaking these levels, it just has such a gap to be filled into that upside, guys. Remember where it's come from. You're talking about a few days ago, you're at $50. It's a huge gap to be filled, and you only need a small portion of it to get a monster trade. Let us know how you did trading earnings overnight. As always, tune in to our morning and afternoon shows on Trader TV Live. See you in the market.